Dear community, this is going to be a short post-analysis crash video. Everything that has happened, how can things move forward from here? I already mentioned it once today in the live stream, but I still want to share it with you again in a video, or let's say explain in a video how things could continue for me based on a few possibilities, including that we might even see lower prices again. I know nobody wants to hear it. That candle was just massive. We can also see at the same time, sorry, not here, but here, that we've already rebuilt over $1 billion on a daily basis right now. We're already at 1.3, 1.55 billion now, which means we've had a lot of new longs coming in, and we can't ignore that in connection with a candle like this. We have to analyze where the prices are, but what is this video about in general? I'll do a quick Bitcoin analysis, maybe also cover 4 altcoins, but honestly, I'm staying away from them at the moment. Because this massive crash, the record crash of 20 billion, no matter what leverage you had on the altcoins, you would have been liquidated. Even with 2 times leverage. With coin margin, even 1 times leverage would have been enough. If you can't compound that often. As a small example, let's take Crow. With Crow, I took a small stop loss, but it was very minor. But where did Crow drop to? It just fell below its all-time low. So here, bear market low, and it even dropped down there and has now recovered a bit here. That means any leverage, any trading pot, no matter what you used here, with leverage, you got kicked out. Let's look at Litecoin. By the way, guys, we had an incredibly good trade with Litecoin. Congratulations to everyone who got in back then, because the take profit was hit right on point. Just look at that. Exactly what we did together in the video. Take profit reached, and then came the complete crash. What happened here is that I closed 3% before the take profit. For me, the market just had a lot of liquidity below us, but hardly any above us. Still, it was a positive trade, worked out very well. But even Litecoin, where were we? From $135 down to $52. Just so we can see that as a percentage, just so you understand what I want to tell you today, later in the video, 62% down. Let's move on and look at Link. Link, exactly the same story, but now I'll switch to the daily chart so we can see it even better. It dropped down to its bear market level. Guys, I don't know if anyone placed their long orders there. But just that one day, Link also dumped 65% down. If we look even further, Solana also had a massive dump, though not as severe, but still very, very significant compared to other coins, if I remember correctly. What did we have here? 42%. With Solana, I entered a small long trade. Do you guys remember? About my message on Telegram where I said, oh man, I got stopped out here by just a hair, really just barely. After that, the price went up, but I said I wouldn't enter any more long orders. For me, there was a level with the liquidation heat map and similar indicators where I thought this is going further down for me. Luckily, I didn't do that. Otherwise, I would have had another stop loss. And then we have Tau. Yeah, I just want to show it just so you're aware of how massive this crash was. Tau simply dropped down to $129, which means below these lows we had here. Dodge, we don't even need to talk about it. Dodge also in its bear market here crashed down to its level. Dodge also in terms of percentage. Where were we here? With this one day down to 68%. It's exactly the same with Cardano. Hey, Cardano almost dropped to its lowest levels here. Even with Cardano, if we just take the crash, not even the peak, it's 70% here. Even a 2 times leverage can't save you here. And that's why today we're going to go over the importance of a stop loss once again. Let's take a look at AVAX. AVAX is actually a really great coin. Where did it go? We see it here at its bear market bottom, really at its absolute lowest point. And AVAX, what did it lose here on the way down? 75%. We could keep going like this. Another really brutal coin was Atom. I was actually pointed to it during a live stream, Atom USD, I think on Binance. Let me pull that up. It just blew away everything you could imagine. It was almost in the negative, but at $0 and 5.4 cents in the spot area. You can't even make that up. What actually happened here, that is the DNC crash, was simply 99.7%. There's no help for that if you're not trading spot. If you had trading bots running with leverage, that was it. That was really it. And that's why, once again, it's very important. We'll go over today a bit more about the importance of the stop loss. Not just that, we'll also cover other things. For example, was this unforeseeable? Yes, guys, the price could have been foreseeable. Of course, I can say that in hindsight now, but let's go through this coin class legend again, where you have insight into the level 2 data, which has been there for ages. Take a look at where the orders have been lying. Since September, long orders have been placed down here at $3,500 and a bit below, and they were basically picked up on point. So it's really unbelievable what happened here. Not only that, even if we go back to Ethereum, you know it. I also shared it with you on Telegram. That would have been my long-term entry from the 0.5 Fibonacci level according to my trading strategy. But these are really just small details. What I wanted to show you is that you're not protected anymore. I've never experienced a crash like this where the altcoins just hit their bear market low, and honestly there was hardly anyone who wasn't affected. Luckily we were among those who participated with Bitcom and opened a small short position almost perfectly at the top, which was great. I also said that I sold here, sold spot here, and sold again here. Then because of the move and because my structure broke, we entered a short position here, realized some profits, and after the crash I closed my position early in the morning. The short crit training pod that I opened from here I also closed here. So it actually worked out wonderfully. I took 3 small stop losses, which is fine too. But I really took a deep look into the market. I shared it with you bit by bit in the videos. And I want to do it again today. The liquidation heat map never lies. It started 2 weeks ago when I said things were going to get wild. And there, 2 weeks ago, we had massive liquidity at 107,000 US dollars. That increased to 5 billion, then it went up to 11 billion. In the end, it was already 16 billion US dollars. And here I pointed out again that there is a possibility barricade versions and similar things. And once again, it proved true. The liquidation heat map never lies. And we'll stay right on that topic. The liquidation heat map never lies. Right now, we have a massive amount of liquidity sitting above us up to 127,700 US dollars. And if we look here at the liquidation map on the weekly chart, we can see it. Currently, we have 12.5 billion above us up to a price of 130,000 US dollars, while below us there are only 1.8 billion at the moment on a weekly basis. Still, it's a very interesting price range for the market makers, maybe also for the exchanges, as they might want to pick that up again. Accordingly, here's a very brief analysis for those who weren't present during the live sessions. The possibility I see now, after we had this crash here, is once again my Fibonacci trading strategy, which you can find, by the way. Just so you know what else I'll be showing you today and where you can find it, if you're still on the channel, just go to the overview. The very first video I show here is about trading bots, 100% passive income on autopilot. They've performed extremely well, collected their profits, and were never at risk of liquidation. The other thing I'll show you later is in the playlist. Not just the video works every time, the best trading strategy, the easiest to apply. If you want to learn trading step by step to becoming a pro trader, I've included everything here. And today we'll go over part of that again. With this tool, you're ahead of 99% of the orders. Institutions use it. Here, we're talking not only about the liquidation heat map, but especially about the large orders. And what's also super interesting is the coin class legend, where we could see exactly where all the orders were placed at a price up to $3,400. And that's interesting when you have this level 2 data insight and combine all of that with the liquidation heat map, just like we did before, so that we caught everything on the way down. Now, my current theory is that if we really do pick up what's below us again, so this liquidation I just mentioned in the map, what's lying here, which is very interesting, where we have something here, but also on a daily basis. In yesterday morning's live stream, I said we were at 50 million, and now we've already built up about 1.6 billion. And in connection with this candle, that would personally make me expect another wick to the downside. So that's my current strategy or assessment. What could that look like? So maybe we could still rise to the 0.5 Fibonacci or 0.618, maybe even here, because here we have a fair value gap. So either here or here, and then maybe go down and pick up more liquidity below. Because we'll also look at where the current liquidity is and where new long orders have been placed. Not just today, Sunday, but also tomorrow, Monday. New orders will of course come in, which will be super interesting to see where we could go. Looking at Bitcoin, because Bitcoin is of course very, very interesting, especially when we look into the futures sector, where people have placed their long orders. Where will more come in the future? At this point in time, it really looks like the price is at 108,730. Not that interesting yet, and there isn't much in there so far. We'll see what happens tomorrow when the market becomes a bit more active again, also when all the other exchanges open up again. I read that Monday is a bank holiday in Israel. So we'll see what happens on Tuesday as well. But for now, it doesn't look too wild in this area as far as Bitcoin is concerned. But of course, we have to look at the liquidations for Bitcoin. And now we'll go back to the liquidation heat map on a 3-day basis. Where do we have the first liquidation at 113,570? And the second is then roughly at 116,000 US dollars. And if we go back, where could all of this be? Exactly between the 0.5 and 0.618 Fibonacci entry. We have a smart money concept, and here at around 114,000 we also have a fair value gap. That means I would go short here and I would also go short again here. Just like I always do, you might already know this, and if not, take another look at the trading strategy. In the trading tutorial, this would be the first position I would take. Even though I'm saying now that, in my opinion, despite the large liquidity above us, we need to pick that up. I can really imagine that this exact wick here will get filled again in a big way, really strongly. The second position I would enter would be roughly here, so we can see if we get a reversal afterwards. If not, it's no problem. Back then, because of the liquidation that was waiting below us at around 107,000 or 106,800, I had already opened positions. And you can see here that at 106,765, I had my long orders, which are now active. But what have I already done? I've taken some partial profits. Why? Because I suspect that we'll see this area down here again. And why could we still go further down? We have, and this is very, very important, if we look at the daily chart, it has failed to trigger the 0.5 Fibonacci level. The 0.5 Fibonacci level has not yet been reached since we started rising here. And why do I say this is so important? We had something similar here as well. Now I want to show you an example. If we take the Fibonacci trading system here and pull it up, take a look at this. We were up here, had new orders at 110,000, then a correction, and in between we also had a strong 3, 4, actually 5 days where we went down. But if we look at this correction here, that was 20%, we had a recovery, and then it went down again, but the 0.5 Fibonacci was triggered here before we continued to move higher. So the price increase only became exponential again afterwards, and that's when we reached new all-time highs. Accordingly, it would of course be super interesting to see whether we might once again target the 0.5 Fibonacci at 100,000 or, and this is the worst case, which I hope doesn't happen, the 0.618 Fibonacci at just under 95,000. And that's going to be very, very important to watch. But you don't really see anything here either, even if I switch to 3 months in this area. Right now you see very, very little. But there is something I want to show you. In the liquidation heat map on CoinGlass, go to Model 3. Model 3, then we go to pair, and then just include the 3 months here as well. And that looks super interesting, which is why I say nobody wants it. I hope it doesn't happen either. But take a look at what's down here. Look at 94,164. Let's go back again. At 94,268 is the 0.618 Fibonacci level. Again, I don't want to spread panic. I don't want it to go down that far. But we have to keep an eye on it as a possible second correction that might go down, even though on a 3-month basis we have quite a bit more below us than above us right now. But overall, I see us where all exchanges are accumulated together. And for me, that's simply a price range where I say it's not a question of if, but rather when it will happen. Just as I said, for me, it's not a question of if it will happen so that we go down, but when it will happen. That's why the liquidation heat map never lies. Please really watch this tutorial all the way through. Afterwards, you'll be so much smarter when it comes to trading. Thanks to this method, for example, I sold my XRP exactly at the top the second time. I sold Bitcoin at the top. I sold even more at the end just now. And then I had an average selling price of $119,000 while I bought back in at $107,000. But if we test this area here and fall again, I would sell my Bitcoins again and actually buy back in at a lower price. Because this exact Model 3 here on a 3-month basis really shocked me a bit, which is why I see the possibility. I don't want to say it will definitely happen again, but I see the possibility that we could pick up down here. That could really be the case if we see another correction, a Black Monday, Black Tuesday, whatever, US market opening, so that we could pick this up again down here. I'm curious, because this has been open for a very long time, since July 26th. Since 2025, we've had liquidity lying down here. The question is, was that it? Will we pick that up or will it remain there? I just want to say, and this is just my opinion, if we go there, I want to be prepared. If we should fall down again, I want to be prepared and know where I can make my entries. Again, this hasn't lied. It didn't lie here. We went in and it hasn't lied in the past either. Yes, that was also the case here. But also here, if we look at this again as a small example, if I go in here now at this bear market, at this high, we all thought it was over in 2021, then came this complete crash again. The 0.5 Fibonacci was an extremely good entry before we rose again. So that's definitely something you have to keep in mind here. If it happens and we maybe test the 0.5, I would definitely go long, but also at 0.618 each time with a reasonable stop loss below. Those would be the options for me. So right now, I'm leaving my long positions open, but I would only open a short if we reach these price levels here. And if you really are altcoin traders, if you have trading bots with leverage, guys, make sure you set a stop loss. You might now have, I'm sure many of you watching this video have had to experience this, have had to go through it. I want to say that I was definitely also lucky to get out very well here. It was very profitable for me at times, but of course also thanks to my intensive analysis. Bearish divergence, which we have with Bitcoin, a strong one on the weekly chart that we must not ignore. And at this point in time, it actually hasn't played out enough yet because it hasn't shown that yet. I also explained this in my video. Bearish divergence, bullish divergence. But we have this one here and we had a resistance and now we've been liquidated massively. We'll see what happens. The only thing that still surprises me now is if we fall lower, really fall lower, what will happen to the altcoins? I mean, altcoins have recovered massively, but what will happen to the altcoins if we go down again now? Is that it? Are we in a bear market or were they already at their bear market lows? If Bitcoin falls, if Ethereum falls again, I've placed another order for Ethereum here at 3,534. But what happens then if we really do fall again? I don't want to say it will happen, but if it does, I want to be prepared for it, just like I was recently. With Ethereum, we also see that there's liquidity down to 3,500 and actually even more than above us, almost 2 billion on a weekly basis. Let's take another look at how things stand here. That's also very interesting. Just like with Bitcoin, we have almost 13 billion above us, but now there's been a strong new build-up down to about 3,500 US dollars. And here again, that's almost 2 billion lying below us. A quick wick down would of course still be possible, as with all other coins, because we had a massive dump here and exactly these kinds of candle shadows, these candle wicks, often tend to get revisited. Now, if we look at this on a smaller time frame, so if we now go to the hourly chart, we can see here a strong wick to the downside. Now we're consolidating and there's a possibility that everything we've built up could be revisited before we actually move up. If it doesn't go further down, but we'll have to analyze that live on the chart. From now on, I'll always show large orders in my videos. Take a look at that. Bitcoin, what we have below and above us here. Very, very interesting. You'll also find that in this description, 99% don't use it. But the large orders, we really need to pay much closer attention to these level 2 data again, because I was honestly surprised by what we saw with Ethereum, where orders were placed and where you could have positioned yourself and in that case would have had a perfect entry. But as a brief final analysis, if we include this here, above and below us are all the orders for Bitcoin. We have 840 million in sell orders above us, up to a price of 130,000 and 1.1 billion in buy orders in the futures market, down to 87,000. Maybe we can take this all the way to the 96,000. You can also see roughly where these strong orders stop at the 0.618 Fibonacci, which I mentioned earlier and which might still be a possibility for me. That would be my next move, which is down here, right here, 94,000 and a bit. Up to that point, we have 1.7 billion US dollars sitting there, so that's quite a lot, but that's just on Binance for now. We're only talking about Binance here without including the other exchanges. That's why this level 2 data is super important. That's my current analysis, and I would do the same for Ethereum. If we see a recovery now, I would actually consider taking a short position. What could that look like now? That big dump was just too good for me to say I wouldn't open a new short here. At least maybe down to the level of the dump. 4,087 to 4,250 are possible entry points. In this case, we also have a fair value gap at this candle. Let's visualize it again. It's very, very interesting that we could go up to this point, but maybe even up to the order block here. That's why both entries are actually interesting. But I find the 0.618 even more interesting. Let's also take a look at this liquidation heat map to wrap things up. But also, where do we have that? I said exactly this data is just so interesting. If we look at this for Ethereum, what does it look like for Ethereum? With Model 3, which I just discovered, it's very, very interesting to see where something might still be lying around. You can see that for Ethereum, there's still a bit left up to possibly 3,000. But also here, take a look at this. Why I only just discovered this, I really don't understand. Model 3, I'll make a separate video about those, but just look at where liquidations have been lying since the beginning of September. So really almost at the candle low 3,400 and a bit. You could have this cluster. You really could have made such good use of this, especially in connection with what I showed earlier with the mega entry from the Fibonacci trading strategy I have. You could have even placed it lower It's a shame I didn't notice exactly these new orders I saw here, or this new liquidation heat map, which just goes much deeper than the normal model one we have. Alright, that's it again, folks. Set your stop losses, maybe don't use too much leverage, or if you do use high leverage, definitely work with stop losses so that something like what just happened can't happen to you again. And if you really want to take your trading to the next level, go through this playlist. 1, 2, 3, 4, 5, 6, 7, 8 videos. I can only recommend them to you, 8 videos. And you'll be on a whole different level in trading because you'll have so much background knowledge. You might even be able to skip the scalping strategy, but you'll really learn about CMI gap, divergence, Fibonacci, price action, and later on the Fibonacci trading strategy as well. And as a result, you'll get incredibly awesome sniper entries. With that in mind, leave a few likes, subscribe to the channel. Let's hit 15,600 subscribers. I would be really happy, and we'll see each other again next time.